Hi everyone. In this video we are going to unpack the extended response question from the economics exam for Queensland in 2023. This is the big one. This is the 400 to 600 word question. It's often been worth about a third to half the marks of the paper, so it's probably worth trying to work through this video. It will take a while, but we'll break it down into steps. Okay, before we go any further, guys, I don't know the exam question for the 2024 EA or any other future EAs. I'm not involved in writing exams at all. These strategies that I present to you in general in nature, they are informed by my research and my analysis of previous exams. Okay, there is no solution. Hopefully we can get some writing structures and strategies to help you hit all the criteria marks of the marking guide. You'll need to make sure that you have your resources from the QCAA website in your general syllabus for economics. I'll link it down the bottom there. Find your external assessment resources. We need here for this one the marking guide and the question booklet and the stimulus. Lots of stimulus in this one. Let's quickly just review the last few years of questions. I haven't got 2023 on here. You start to see a bit of a pattern. Pause the video, read through these questions yourself and start to find the common elements. And we'll move on. Step one always is know your question. Analyze to evaluate. Really, these questions generally across the years, we're looking at Unit 4, Topic 2. We're looking at government influence and intervention in markets. What's the policy area? What's the problem? What are we trying to solve? Make sure that you're clear on your stakeholders. Remember, our three big stakeholders in economics: households, firms, and government. Check the question. Is it directly asking you to address the data from the perspective of a particular stakeholder? What are the different perspectives or policy options to unpack? This is something that's occurred through previous year's questions. Typically, the questions have been option 1 or option 2, evaluate costs and benefits of both, break down why they could work or could not work, and come to a conclusion. What's the criteria that you're evaluating against? Make sure you're clear about what our benchmark is here, and that's actually going to come up in today's video. Do you know your theory? Make sure you're clear with your macroeconomic theory. Step 2, understand your data. Here's the 2022 data. What we see is they give you 7 sources. They can appear really random, but if you break them down in the order that they're presented, you'll generally be able to work through the steps of the question quite effectively. That's what we're going to do today. Step 3 is to plan your response. Here we can see a little 8-point outline that's been useful to use in previous year's exams to hit all the marking guide criteria points. Step 1, identify the issue, the problem, the economic problem that's occurring there. Step 2 is justify it. What's the problem? How do you know it's a problem? You know it's a problem because there's data that's going to tell you what it is. And the thirdly is, what's the reason for government intervention? Simply put, what's the problem? How do you know? How do you know? You can't just say, oh, it's a problem because I think it is. How do you know? And why should the government get involved? Why should the government get involved? Once again, the first step for your response is basically going to be a bit of a what, how, why. Typically then, previous years, there's been balanced 2 different options. Go back and check those questions from previous years. You'll see those 2 options there. Come with a decision that makes sure you consider stakeholders and criteria. Make sure you are very, very clear on your question. Provide reasoning, linking data and theory. I reckon we should do this. This is probably the best outcome because economic theory tells us blah, 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 blah. Before you go any further though, always acknowledge, is there any limitations or trade-offs, any unknowns? Apply ceteris paribus. Make sure you always think, well, we can only base this that's on the data that's in front of us. Now, previous years what I've done, guys, is I have given the question and then we've broken down the question and the stimulus material based off the back of it. But because everyone's brains are really getting into gear, getting ready for the exam, I thought, well, look, man, let's just flip it this year. Let's flip it and let's look at the stimulus first, and then we will look through the question afterwards. See if we can figure out the question from the stimulus. And that's the end of part 1. So this is the stimulus material from the 2023 exam. I'm going to break down each of the sources in order. Get your source material, your stimulus material in front of you, and you can annotate as we go along. Source 1. In an era of low unemployment, payroll tax policy and its implementation across Australia are controversial. Okay, we're starting to see this idea, first of all, of an issue, problem. Payroll tax on average is around 5%, and it's levied by states and it's paid by employers. We're already starting to see from part 6 here this idea of stakeholders. We're seeing it's a fiscal policy question. It's around tax. Okay, we're starting to see our stakeholders, our firms. It's based on employees' salaries, so the more you pay your employees, the more you probably pay this 5% tax. Firms pay a 5% tax. If firms pay a 5% tax to the government on their payroll, that is a cost to, let's do our prices here. That's a cost on the aggregate supply curve. I'll do a nice one like this here. It's an increasing cost on the aggregate supply curve, AD. And so therefore, we would see AS shift to the left, and we see prices rise. Prices rise. And we also see here, for instance, that GDP or output or unemployment, GDP falls, unemployment rises, etc. So we're starting to see some stakeholders. We've got some theory behind us here, okay? And it's a state-based tax. So from the first point here, we can start to say, well, here's some issues we can see. It's going to be inflationary. It's going to add to the cost of doing business. It's going to affect firms. Anything that affects firms affects households in the circular flow. Let's keep going. Source number 2, excerpt from 2020 survey of Australian businesses that pay payroll tax. Is a moderate burden to business, a high or a very high burden to business? Okay, so if we put those two together, we start to see that you've got there, let's do some mathematics on it, we've got 75% here of businesses is moderate or higher. Most businesses find it a problem. Give a little less there. Okay, we're starting to understand that there's a problem here with payroll tax, and now we've got some data to back it up. So we can start to think now, what could the government do around this in the first instance? Okay, so we've focused on the firms as our stakeholder. We've got some data to justify why it's a problem. Top 5 taxes paid in Australia by revenue. Personal tax, income tax, company tax, tax on profits. Payroll tax is not a big player in terms of where we source a lot of our income. Still provides $30 billion. But once again, we can sort of start to say, well, there's some data here to back this up. Should the government look to change something? So we've got firms now to think about. The government, firms obviously don't like it. Should there be a government intervention? You know, if the government played around with the rate of payroll tax a little bit, it wouldn't have a big impact on our bottom line here compared to all the other income in tax we get from income tax, revenue we get from income tax, etc. So should the government intervene? What's a good reason here? What would be the benefit, for instance, of shifting our AS back to the right? Shifting it back to the right. What would be the benefit of that? Prices would fall and output or GDP would rise and unemployment would fall with that drop in tax. Theoretically, is that a good rationale for the government to go, firms don't like it, it adds to the cost of doing business? Okay, now we're starting to see, I'm not sure actually looking through these, we haven't really got into our options yet, have we? We're halfway through the stimulus. Let's just put a question mark against those for the moment. Excerpt from the 2021 survey of businesses that pay payroll tax. 21% of businesses would increase wages if payroll tax was scrapped. Okay, so an increase in income, wages for households equals likely an increase in consumption equals an increase in tax income. So there's a revenue stream back to the government equals potentially some savings, and savings leads to often investment funds, onshore investment funds, good for your current account position. 90% of businesses state that payroll tax places them at a competitive disadvantage. So we start to see this idea of firms, and half businesses would employ more people without payroll tax. We're starting to see the role of households come through here. Okay, so we're once again building that idea around what does the data look like. Industry representative. Remember, industry representative once again is firms. Some stakeholders criticise payroll tax on the grounds it is a tax on employment and acts as a tax on economic activity. Well, that's true. We've seen that there already in our AS curve, haven't we? AS1 with payroll tax, AD. We've seen that it is a decrease in output, output 1. And a decrease in output equals an increase in unemployment, a drag on economic activity, less consumption. However, in practice, the cost of paying the tax can be passed on either to employees or to consumers. Okay, so once again, we know that from our little ADAS, we know that prices are rising. Prices rising affects households. Once again, we're seeing this really clear picture here around these stakeholders. Once again, put a pin in our options for the moment. Not sure how we're going to go just yet. Payroll tax as a percentage of taxes raised. So in the previous source, they talked about competitiveness. And we know that income tax equals about, on average, about 5%, or payroll tax is 5%. Here we see New Zealand, Japan, and Germany have 0. The United States has 0.1, 0.5% in payroll tax. So, for instance, we start to think about the question here of our international competitiveness. How can a firm compete against goods and services coming from other countries when they are slugged with an additional 5% cost of doing business on a government tax? So once again, we're seeing here with the idea of firms. Remember, firms provide jobs. Anytime we see firms, we can always link it back to households. Source 7, excerpt from a news article. The problems associated with the deficit. Okay, so we need to know our fiscal policy on this one. Fiscal, a deficit is where tax is less than government expenditure. The deficit is getting bigger. Spending pressures during 20 to 22. Okay, so government, we don't know what's happening with tax at the moment. We know that government spending is rising. Therefore, we have an increasing deficit. Spending as a share of GDP is projected to grow in terms of public investment needs, including government interest payments. So now we're seeing that there's a problem for the government. They are spending more money in the future. They're spending more money and they've got to pay more interest on their loans. And yet the question exists around what do we do around this tax, this payroll tax? Okay, because if you've got government spending rising and you don't have taxation increasing, you have an increasing deficit. Remember that in increasing deficits, we often undertake loans from overseas and domestic. But something that all loan needs paid back is interest, big cost to government, and eventually the principal. Okay, but the big thing here is that there's going to be future debt. There's going to be future debt without some change to taxation. Source 8. This is neat, this one. I like this sort of comparison data. There's a couple in this one here. It's really based around comparison data this year, not so much based around trends or anything like that. Here we're comparing the states. Okay, and what we can see here between the states is that the states have different tax rates. And so what it means is that even within Australia, the cost of doing business varies based on how you've got your payroll tax set up. You've got different thresholds here before you have to start paying that tax. So Victoria, $650,000 payroll tax, payroll book. New South Wales, $1.2 million in payroll before you start paying out that tax, and you pay it out at 4.85%. Western Australia, $1 million, and then they have their pay rates down the bottom here. It gets very complicated in this one here, and I'm not sure how much you really need to unpack it. But once again, we see that state by state, we've got some challenges around the competitiveness of firms when there's varying rates of payroll tax paid. Okay, I'm going to pause my voice, take a minute, and then we'll do part 3. So now we've spent some time going through our 8 sources of the stimulus book. Let's look at the question. This section has 1 question and is worth 22 marks. It's the lowest it's ever been. What we saw in previous years is that the question could be nearly half the marks. Okay, I think QCAA are tending towards the final question having a bit less emphasis placed upon it. Okay, you've got to work a bit harder for the middle, those short response questions now. 400 to 600 words, still a bit to write. Use all sources in the stimulus book to prepare your response. They are all useful. Explain the rationale. Remember, the rationale means the reason for the scenario presented to reduce payroll tax in Australia. That's part 1. Let's just pause on that for a minute. The second part, evaluate the benefits and costs using the perspective of households, businesses, and government. This question, guys, last year was really, really clearly laid out in terms of what they wanted you to do. Once again, explain the rationale. What is the issue? Okay, so let's look at the issue. Once again, what is the issue? How do we know it's an issue? That's the data. Why should the government, in this case, reduce payroll tax? Why reduce payroll tax? Kind of links back to your data, doesn't it? Okay, there's your issue. Then simply evaluate the benefits and costs for doing this from the perspective of households, firms, businesses, and government. I've then got households, benefits, costs, firms, I don't like businesses, but QCAA, business, cost, and government, business, benefit, and cost. Benefit, cost, benefit, cost, benefit, cost. Suddenly that question looks really simple. All that stimulus starts to look really simple because we've looked at all those stakeholders looking through that. Let's check the marking guide. The response, key points, describes the complexity of payroll tax, uses data to support complexity. So the issue here is the complexity. Uses a calculation to enhance meaning. Okay, make a calculation. It's worth 1 mark. Explains that payroll tax is inefficient. Inefficient because it's collected at state level, and also that it is different per state. Different rates. Sorry about handwriting. Different rates per state, but also it has different, let's just put different rules about the collection of it. Different rules. And that actually comes sort of back from source 8. Okay, it's not like not like GST, where we just know GST is considered an efficient tax. It is applied equally throughout the country. It is the same flat rate regardless of what you buy. Okay, this one here is very, very different in terms of its collection. Even the rules about the levels of the revenue and the income streams that you need before you start collecting it, or the payroll size. The response, households. The response, businesses. Take a moment to read through each of those points now. I'm going to actually look at the next one here. Explains not the highest one. You can read that there yourself. Let's look at number 4. You guys should be able to get number 4 easily. Explains 2 benefits with 1 item of data. Judges that the benefits would lead to a higher standard of living. That's right. We'd see incomes rising, unemployment falling, GDP output, etc. Identifies that from the data there's a lack of costs. Right. So once again, if you just go, well, I can't really find any costs, and that can be hard to do. That's actually really tricky, that point there. But just explaining 2 benefits, it's the same thing here for businesses. Explains 2 benefits using evidence. Benefits would be higher profits. Well, it's questionable. It'd be lower costs of doing business. Lower cost of doing business. Ergo, ipso facto, quid pro quo may mean, that's made up Latin, by the way, may mean higher profits, but we're not sure exactly. Identifies the lack of costs. Okay, so once again, if you need a little thing to think about here, how many benefits and costs do I need? Think there's 2. There's 2. Like, find the 2. I'll make it big, thick red lines. Never just give 1. Okay? If you can't find the costs, if there's nothing in there that represents a cost, maybe you can't make that up. Be clear that you are analysing the data presented to you. The top version here actually explains the benefit of 1, 2, and 3. Okay, 1, 2, and 3. And if you go back through the video, you can find those in the stimulus material. Okay, but costs and benefits. We've done the issue, costs and benefits. Government benefits and government costs. This is where there is some discussion around, there's some discussion there around costs and benefits for government. Explains the government benefit of improved allocative efficiency across the states. That to me is questionable, because the question only says that you have to reduce payroll tax, not that you change the rules about payroll tax collection. So that there is QCAA. They want to put their big boy pants on and call it that. That's fine. International competitiveness using evidence. Okay, that's clear in the data. When we start to think about international competitiveness, we can link it back to, for instance, are we running what are our terms of trade look like at this point here? What's our current account look like at this point here? Each benefit would create some economic growth. Always, once again, talk back to your AD equals C plus I plus G plus X minus M. Okay? Always talk back to your AD theory. You don't have to write it each time and explain to me how it works, but that's all good. And government cost, explain removing payroll tax revenue using 2 items. That was very clear in the fiscal policy section around the deficit. All right, so guys, take some time to break that down for yourselves. Figure out if that all makes sense. And that's the final exam question for the 2023 paper. You should be well primed for your upcoming assessment. All the best, folks. Take it easy.